Inheriting a property here in the UK, well, it's an emotional and pretty complicated time, isn't it? And then on top of everything else, you're suddenly hit with this huge question. What on earth do I do about capital gains tax? So today, we're going to break it all down and make it simple.
And just so you know, to make sure we're getting all of this spot on, all the information we're about to cover comes directly from the experts over at ProTax Accountant. These are the folks who specialize in helping people navigate these exact kinds of tricky tax situations.
Look, inheriting a property it's a bittersweet thing, right? You're navigating a really difficult time, and honestly, the absolute last thing you need is some kind of surprise tax bill landing on your doormat. Our goal here is to make sure that just doesn't happen to you. So here's our game plan for today. We'll kick things off with why this tax can feel like such a surprise. Then we'll get clear on what capital gains tax actually is. After that, the good stuff. Powerful strategies to lower your bill, some really common traps you'll want to avoid, and finally, when it makes sense to get an expert involved.
All right, first up, inheritance and that tax surprise. Let's dig into why this can feel like such an unexpected and, frankly, unwelcome challenge.
Okay, so first things first, what even is capital gains tax, or CGT? Well, put simply, it's a tax on the profit, the gain, you make when you sell something that's gone up in value. And here's the most important part to remember right now. You do not pay this tax just for inheriting the property. It only comes into play if and when you decide to sell it.
Now, this next term, you've got to lock this one in, probate value. This is the official market value of the property at the moment the original owner passed away. And why is this such a huge deal? Because that value becomes your base cost. It means you're only taxed on the growth in value from the day you inherited it, not from way back when it was first bought.
Phew.
So, let's talk numbers for the 2025 to 26 tax year. When it comes to residential property, the rates are set at 18% for basic rate taxpayers, and it jumps to 24% for higher rate taxpayers. Which rate you pay depends on your total income for the year, once you add the gain from the sale.
Okay, now for some good news. Everyone gets a bit of a break. It's called the annual exempt amount, and for this tax year, it's £3,000. This means the first $3,000 of your gain is completely tax-free. And, even better, if you're married or in a civil partnership, you can actually combine your allowances for a whopping £6,000 tax-free.
Okay, I need you to really pay attention to this next number. Seriously, you have just 60, that's 60 days from the moment the sale completes to report the gain to HMRC and pay any tax you owe. If you miss this deadline, the penalties are automatic. It's a tight turnaround, so you have to be ready.
All right, now that we've got the rules down, let's get to the good stuff, the practical strategies. Think of this next part as your personal toolkit for legally and smartly reducing that potential tax bill.
Okay, if you take away just one thing from this section, let it be this. The absolute #1 most powerful strategy you can use is to make the inherited property your main home. This brings in something called private residence relief. If you genuinely live there as your main home, any profit you make when you eventually sell could be, wait for it, completely exempt from capital gains tax. Just to show you how massive this is, let's paint a picture. Imagine the property's value has gone up by, say, £40,000 since you inherited it. If you sell it as a second property, you could be looking at a tax bill of thousands. But if you move in and make it your primary home, that exact same £40,000 gain could result in a tax bill of zero. The difference is absolutely enormous. Here's a really clever move, especially for couples. Any transfers between spouses are completely tax-free. So in this real-world example, a woman named San inherited a flat. All she did was transfer half of it to her husband, Thomas. By doing that, they could use both of their £3,000 allowances and also use his lower tax band. That one simple move saved them over £2,000. And you can see it right here on the chart, clear as day. The total tax bill just plummets. It's a perfect illustration of how using every allowance and every tax band available to you as a couple can make a huge difference.
Oh, and this is a big one. Don't forget to deduct your costs. You can literally shrink your taxable gain by subtracting all the legitimate expenses you've had. We're talking about things like the probate valuation fees, legal costs, any major improvements you've made, like a new extension, and even the estate agent and conveyancing fees. The golden rule here? Keep every single receipt.
Okay, so we've talked about what to do, but honestly, knowing what not to do is just as important. It can save you just as much money and a whole lot of stress.
Let's make sure you don't fall into any of these common pitfalls. There are 3 big traps that people fall into all the time. First, missing that 60-day deadline, that gets you an instant penalty. Second, not having proof of your costs, which means a bigger tax bill. And third, just assuming you get private residence relief without any evidence, like utility bills in your name. That's a great way to get your claim denied. But the solutions are simple. Set reminders, keep amazing records, and gather all your proof.
And if you think a little paperwork doesn't matter, listen to this. Neris spent £20,000 renovating her inherited property. She fully expected to deduct it, but she didn't keep the receipts. HMRC disallowed the entire deduction, and that one oversight cost her an extra £4,800 in tax. It's a really painful lesson, but it shows just how vital that paperwork is.
Look, even with all these strategies, let's be real. Tax law can get messy, and it can get messy fast. Sometimes, the absolute smartest and most stress-free move you can make is to bring in an expert.
So, you might be thinking, what does a tax pro really do for me? Well, they do way more than just fill out forms. They dig into your unique, personal situation. They hunt down every single possible relief and deduction. They make sure you are 100% compliant with HMRC. And ultimately, they build a tailored strategy to legally minimize your tax and maximize what you keep from your inheritance.
At the end of the day, it really all boils down to one thing: proactive planning. That is the absolute key. By understanding the rules and taking the right steps before you sell, you can protect the value of the property you've inherited and just avoid all that unnecessary stress. So if you're feeling a bit overwhelmed by all this, or you just want that peace of mind that comes from knowing it's all being handled correctly, the team at Pro Tax Accountant is there to help. You can reach them directly on WhatsApp or by phone at 07985689912, or just drop them an email at info@protaxaccountant.co.uk. So, let's leave you with this thought. Remember, you've inherited a property, not a tax burden. With the right knowledge and the right plan, you can protect its value for your future. So the only real question left is, how will you plan?